let's discuss the very important topic for the business analyst interview in the investment banking, wealth management, or the BFSI domain. Most of time, they definitely ask you what is the asset classes, explain the asset classes, or what are the difference between the different asset classes. For business analysts, you need to understand these asset class domain also very important. So I'll create a one slide for you and please go through it and understand what is asset classes and what types of asset classes. But guys, before that, if you want to be a business analyst and if you are interested in the field of business analyst, I have created the videos for you for the business analyst in the business analyst perspective or domain perspective. So please like and subscribe my channel so that will motivate me to create more videos and understand you the business analyst field. So thank you guys. So let's start the discussion. The first one is the introduction. What are the asset classes? So what is the asset classes? So guys, asset class is a group of investment that exhibit the similar characteristics and behave the similar in the marketplace. So we are grouping, there are the n number of investment in the market or the investment types in the market, but we are grouping these investment with the similar characteristics or the similar behavior or the similar kind of return or the similar kind of risks. So on that basis, we are grouping. We know that is the equity asset class, that is the fixed income asset class, that is the commodity asset class, that is the real estate thing. Okay, that is a derivative. So that is the help us to asset class to classify the different kinds of investment with the similar group. And the key characteristics is the similar risks and the return profile are the same. It matches with the risks is their similar, return profile is their matches, and the response to market factor comparable way. They are the similar market factor, most of the things, and the form of foundation of investment portfolio. So whenever you are investing in the portfolio, so that are the equity oriented portfolio, debt oriented portfolio, commodity oriented portfolio. So that's help us to found that way also. And then why are they important for the business analyst and the asset classes? So it is an contextual understanding, system requirement, data analysis, and stakeholder communications. So in contextual understanding point of view, it is a crucial for a BA working with financial services or the financial market like wealth management, investment banking, fintech. Okay, BFSI domain. Understand these the asset classes concept or the in the system requirement. It will help the business analyst to define the requirement for trading the platforms. Okay, and the risk management systems and portfolio management tools to understand the asset classes and their the key features or the key functions or the risks and retail things to understand there on the basis of asset classes, and the data analysis to understand the data structure, matrix, reporting need related to various types of asset classes and its data structure, its functionality, and the process is also different, and we know the order processing style for each asset class may also the different, so that will help there also. And then the stakeholder communication facilitate it, the asset class will facilitate the effective communication with trader, portfolio manager and compliance officer and the client, and it will also help us while doing the stakeholder analysis. So who are the expert in the which asset class, so accordingly we will gather the requirement from such stakeholders. So asset class are the very important while we are working on the wealth management, investment banking and fintech projects. Let's move on. The first and most important asset class is the equity, which we also call as a stock. So equity is and the represent the ownership in the company. If you hold the equity or the stock, so you are the owner of the company, and the investor buy the shares hoping that company value will increase in the future. So if the company value will increase or decrease in the future, so accordingly your the stock value or stock price will goes up and goes down. But there are the two common types of the equity. One is a common stock and another one is a preferred stock. So if you hold the common stock, so if you have the voting rights, variable dividend you will get, and you are the owner of that percentage of that company. But the preferred stock is not like that. So it has a fixed dividend, whatever they decided to you on their the notes or the document. And no, you don't have the voting rights for the preferred stocks, and higher claim on asset than the common stock. So you have the higher claim. But the key characteristics of the equity are the high potential for capital appreciation. There are high chance to increase your the capital, higher volatility, and the risks compared to the fixed income is high. If you compare the risks with the fixed income or the bank deposit, so there is high and volatility is also high, but liquidity varies by the stock. And the BA should understanding in the perspective of the equity asset class is the understanding the order types like market limit, shops, how the order journey will happen, how the trade will happen in the equity. So that should understand by the business analyst, and analyze the market data like price, volume, bid ask, and the different equity pricing models. Okay, and design the system for stock trading, portfolio tracking, and the corporate action. So that's how there is a dividend, split, merge, demerge will happen in the equity market. So that's the first asset class is equity. Let's move on. The next asset class is a fixed income, and it's the most important. We call a bond. So fixed income bond. So the definition of fixed income, it is an this debt instrument where the investor lend money to borrower, and like a borrower, like a government, corporation, municipal corporation, could define the fix at a period at fixed rate of interest. So he will receive the fixed period at a rate of fixed rate of interest. So types of the fixed income like a government bond, for example, treasury bonds, municipal bond, floating bonds. So that's are the product of government, zero coupon bond that issue by the government, and the corporate bond which is issued by the companies. Okay, large companies, mid cap companies, small companies, for higher than the risks, and there the risks higher risks than the government bond. Typically, potentially higher the yield the corporate bond will offer you. There is the bond. Rating is triple A plus, triple A minus, triple B plus, triple B, triple B minus, triple C. So that kind of the ratings there, and accordingly the interest rate or the coupon rate will vary for the bond. And the market mortgage backed securities, bonds secured by the mortgage securities. So like home loan or the construction loan. So that's bond are have the security. But the key characteristics of the fixed income asset class are the regular interest payment, coupon payment, floating or the fixed coupon payment you will receive if you invest in the fixed income. Principal of return at maturity you will get, and the generally lower the risk and lower the potential return than the equity. You can there is the low volatility for the fixed income product. So calculating the bond yield and duration convexity is the the BA will do that thing. Developing the system for bond issuance, trading, interest payment processing. So as a business analyst will involve the part of the systems which are the bond issuance, trading, interest rate payment processing, and the managing the interest rate risks within the portfolios. Okay, let's move on the next. Real estate. So it's a defined the real estate is an investment in the physical properties like bond, like land, sorry, like land, building, okay, or the real estate related assets. So it will invested in the land, building, homes, okay, that kind of that kind of asset will invested in the real estate, and there is the product specific product in the real estate which is a REITs and InvITs. So let's discuss step by step. Direct ownership, residential, commercial, industrial properties are directly owned by the individual or non-individual firms. And then the another separate product where the retail investor can happen is a real estate investment trust, which we call REITs company that own, operate, and finance income producing the real estate and traded like stock. So it will be traded on the stock. Real estate funds pooled investment on in various uh, properties or and invest there the properties. So what is the structure of the real estate fund? So they will collect the funds from the retail investor or the HNI client or the financial institution, and that invest in the company's own, and then the fixed income product or the construction of building, and take the dividend, take the return from them, and provide the investor to the in the form of dividend, and their valuation will go, and that are exchange on the trade. Okay, so that's the REITs product. So key characteristic, it is at potential for rental income and capital appreciation, has the price or the valuation of increase in the land or the building or the government property or the company buildings, so that's the valuation will increase. Illiquid compare with the stock and bond direct ownership. It is very difficult to illiquid this asset. There is a buyer and seller in the market, so that's will happen. Can be hedged in against the inflation. Yeah, it will be help to hedge the inflation. And the role of BA in that the real estate asset class should be understanding the property valuation method, how to do the valuation of the property, and what are the factors should we take to valuation of the property, and design the system for property management, and the rental income tracking, and the REITs analysis, how to do the REITs analysis, and analyzing the market rate in property sectors. Okay, what are the market rate in the property sector? Let's move on. The most important is the commodity. So commodity is another the asset class. So the commodity asset class contain the raw material and the primary agriculture product, or the the gold, silver, the metals can be bought and sold in the commodity market. And in India, the MCX is the largest platform where we do the the commodity exchange, commodity product exchange. So the types of the commodity, hard commodity and the smart commodity. So in hard commodity, the resources like the natural resources that are mined and extracted from the the land, or from the nature, from the nature. So like a gold, silver, oil, natural gases are the uh, hard commodity. And the smart commodities are the agriculture product or the livestock, wheat, corn, uh, coffee, cattle. Agriculture commodities are comes from the smart soft commodities. So let's key characteristics of the commodities are the price influenced by the supply and the demand, geopolitical event, weather that's are impacted on the price of the commodities, and can act as a influence and hedge, often traded via the future contract. It will be traded via the future contract. Okay, and the BA relevance, understanding the future and option contract. If you are in the commodity market, designing the system, commodity trading, and risk management, hedging strategy, analyzing the global supply chain impact on the commodity prices. So that thing should understand by the business analyst if he work on the commodity asset class. Let's move on the next slide, that the alternative investment. It is also most important asset class. So in alternative investment, we should understand the investment that fall out the traditional categories of like the stock, bond, cash, often the less liquid and more complex funds. So that's the alternative investment. So let's consider the types of alternative investment so you can understand. The first one is the hedge funds, private equity, private debt, public or the infrastructure or the derivatives. So the hedge fund is actively manage a portfolio using the diverse strategies like long and short equity, global micro. There is the actively the teams to manage the hedge funds. And the private equity, that investment in companies not listed on the public exchange. So whenever the investor will invest in the companies that are not listed in the companies, or they will do the venture capital, leverage buyouts, directly invest in the companies which are unlisted on the exchange. So that's the investment is a private equity. Okay, and then the private debt is also the loan made to companies or the project that are not publicly traded. Okay, these companies are to make the loan or give the investment which are not publicly traded. And the infrastructure investment in the facility, the roads, bridge, and utility. If we are invested in the infrastructure like REITs and which products are the infrastructure product. And then one of the most important is a derivative. Derivative, it is a financial contract whose involve are derived from the underlying asset, whose value is derived from the underlying asset. And there are the types of the derivative contract is a option, future, swap, okay, the forward. These are the derivative contracts. And the key characteristics of the alternative investment is a potential for higher return but higher the risk and the complexity is there. There are the different types of contract, lower the correlation with traditional asset and diversified benefits. These are also there in, and also the alternative investment. One of the most important characteristics we can consider obtain the high minimum investment requirement and lack of periods. It require the less period, shorter duration. And the BA should understand in the part of alternative investment is a complex valuation method and perform the matrix, developing the system for managing the illiquid complex fee structure and regulatory reporting, understand the unique operational workflow and these processes, instrument what cover in that part. So that thing is understand by the business analyst, and whatever the asset classes like equity, fixed income, real estate, commodity, alternative investment should understand by business analyst in asset class perspective, so it will get higher chance to get the higher salary. So let's understand the understanding the risks and return with the each asset classes. So the risks, what is the risks? Okay, so risks is possible that the investment actual return will differ from the expected return. So whenever we are investing in particular asset class, so we have the goal to achieve the XYZ the return from that investment, but the risk is a thing that are not allowed to get the returns as we expected, or potentially you may be lost the principal amount while doing the investment. So to volatility, credit risks, interest risks is a matrix to do to analysis on that point. So risk may be the positive or negative the return. The return is stand for the gain or loss on the investment over a specific period expressed as a percentage. So we will always calculate the return on the form of the percentage, and it will help us how much we will gain or loss on the investment for the specific period or the specific time, and it will be calculated on the yearly basis. So return and risk spectrum general tendencies are the, there is the high risk, high potential return. It's the common thing. If you are investing in the high risk portfolio, so that will be give us the higher return, like equity, especially growth stock or the small caps, alternative investment fund like hedge fund, private equity, and the commodity are comes under the high risk and high potential return. So moderate risk and moderate return like the balanced portfolio, some real estate REITs and with products. The low risk and low return like the fixed income government bond or the triple A rated or the triple A rated plus fixed income companies fixed income product or the cash equivalent. And the BA should understand in that the risk return perspectives like define the risk matrix like VAR, CVAR, standard deviation, expected shortfall. Okay, conditional VAR or the probability of default, loss given default. So understand this thing, how to calculate, how to done that thing calculation in the Excel, or how to done calculation in the Python or the other languages. So that should be understand by the business analyst. And implementation risk management features or the financial software ensure the compliance with risk policies. So that's the thing is understand by business analyst. So let's move on the next slide, that is the asset allocation and diversification. So asset allocation, first let's discuss on the asset allocation, then we will discuss on the diversification. The asset allocation is a process of dividing the investment portfolio among the different asset classes to achieve the specific investment objective, like a objective related risks return or objective related, the get the higher return with taking the ability to higher risk. So on that basis we will allocate the asset or do the asset classes based on the investment risk tolerance and time horizon and the financial goal, how much the risk he will able to bear. So accordingly we will do the asset allocation. And the diversification, the to hedge the portfolio, to hedge the investment. So diversification is one of the most important technique that is used by the many investors. So investment across the various asset classes and industries, geographics to reduce the overall portfolio risks and If one asset class will decrease, then other asset class will give us the profit. So there is the always so that's the diversification helped by the asset classes. And don't pull all your eggs in one bucket, and aim to smooth uh, out return for offshoring the one asset class and gain the another. So BA should understand what things are in the asset allocation and diversification, and designing the tool for portfolio construction and rebalancing, developing the report features for show the asset class breakdown and their diversification matrix, how they are diversification, they are clear how the documented way, and understanding the client sustainability and investment mandate. So that's the part BA should understand in the part of the asset class, asset allocation, and the diversification. Let's move on the next slide. So BA role of business analyst in asset management. So first one is the requirement initiation. Gather the need from the portfolio manager, trader, risk analyst, or the compliance officer, or the business team with using the requirement illustration technique like group discussion, chat session, workshop, brainstorming session, meetings, team meetings, inspection or observation, document analysis, and then the system design that translate the business need into the functional and non-functional requirement for the IT system or the system requirement, so that the development team or the tester can understand to prepare the business requirement document, functional requirement document, to prepare the end user manual RTM for the system designs and the process optimization, then identify the inefficiency and investment workflow and the process solutions, give the optimum process flow, how the user will interact with the system with each asset class, understand the journey of each asset class products. So accordingly to build the process of the systems and the data analysis and reporting, ensuring the accurate data capture from the system, processing and reporting the various asset class, understand each asset class and the regulatory compliance, helping implementing the system additions to the financial regulation like MIFD to Dodd-Frank Act. So that should be, the regulatory compliance that should be very well understood by the business analyst. So it will help to work on that thing. And the stakeholder management, bridging the gap between the business users and the technical team. So that is the things to do the stakeholder analysis, to do the different kind of work in the requirement gathering, requirement analysis, design, development, coding, testing, feedback. So there is the role of business analyst. And let's conclusion on that slide. This is the last slide. So understanding asset classes is a fundamental for a business analyst in finance. If you're working in the finance or investment banking or the wealth management firm, so you should clear cut understand on each the asset classes. It enables the effective system designs and data analysis and communication. A solid grasp of risks, return, asset allocation, and diversification is the key. So that thing you should understand by the business analyst. Okay, and it helps us to design and data analytics and communication things understand very well. So let's the question and answer. If you have any questions, please ask me. Please, if you like my video, please do the comment and will subscribe my channel, so that will motivate me to create the more videos. Thanks guys for attending this seminar.